Welcome back. Let's get another corporate conversation going. This is CenturyPly. There was a good performance that came in from their plywoods business in particular, where the volumes grew by about 15.8%. We saw realizations improve a tad as well. And as a result of which, the margins increased all the way from 8.6% to just shy of that 12% mark itself. And that really is the obvious path that we will focus on when we have the conversation with Keshav Bhajanka. Keshav, thank you so much for joining in. FY2025 so far has had some elections. There was CapEx, which was, planned but not deputed so far. What's your outlook on demand recovery and the target for FY26, particularly for the plywood business? And also, if you could give us a sense on other businesses.
Good afternoon. Thank you so much for having me on the show. I think that overall, considering the muted demand environment, we have had a very good quarter. 20% plus growth on a consolidated basis is something that I think as an industry, we're one of the few that companies that have been able to achieve the same. For plywood, definitely our plywood segment has done very well. I think we have grown by close to 19% YOY. And that has been a substantial growth, which is aided by gaining market share because the market growth hasn't been all that great, to be honest. Going forward, I think our guidance for the current year was we'll grow volumes value by 12% and we'll maintain EBITDA margins between 12 to 14%. And I think we are pretty much in line to maintain the same next year as well.
Could you give us an updated market share? Because the last time you said plywood market share was close to 7%. And laminates at around 6%, and seems like you've gained market share in the third quarter, like you pointed out. Could you quantify that for us?
We've definitely gained market share, but as you know, our data there isn't any authenticated source of data as far as plywood is concerned. However, judging by competition and the reported numbers that competition has done, I think it is safe to assume we've gained market share. The quantum of the same, maybe you'll get to know at the end of the year.
Okay, all right. Hi, Keshav. Always good to see you. Ben, give us some inputs on a couple of your raw material, timber as well as chemicals. Have those prices come off the peak?
I think in terms of timber, they have not really come off the peak, but we don't see any further increases. So that's a step in the right direction. As you know, in the past 1 year, particularly for MDF and particle board, the cost of timber has more than doubled in certain geographies, and we have faced huge inflation in the price of timber overall. So I think that going forward, it is likely to be status quo. I don't see any reductions per se, but I don't see any increases as well.
So what does that then mean for your consolidated margins? Because you do have the benefit of the MDF utilization increasing. So next year, what should we look at in terms of overall sales growth for the company and margins in particular, given the stability in raw material prices?
I think in MDF, from last quarter to this quarter, we have increased in margin from, say, less than 6% to greater than 13%. So there's been a substantial increase in margins, primarily on account of operating leverage, like you rightly pointed out. The guidance for MDF margins are 15% that we are given for the current year. Whereas for the current year, it might be difficult to hit the same because of a weak H1. I think next year, 15% plus should definitely be achievable.
All right, Keshav, you've got a capex guidance, right, for this year. Could you tell us what is the updated number? FY25, how much are you spending? FY26, how much are you spending? And since you'll be spending money, what kind of debt number are you comfortable with? What is it? Where does it head?
So our overall capex is pretty much going to be in line with the guided numbers we had given. The particle board plant that we are likely to commission by perhaps end of this quarter or the start of next quarter, that is likely to cost us in excess of 500 crores, which is in line with what we had guided. We are thinking, or we have finalized on a new capacity for plywood at 𝘱𝑗𝑡𝑎𝑟pur, for which we have already bought the land. And that capex will be to the tune of 100 crores or slightly higher than 100 crores. So these are the two frozen capex plans that we have as of now. I think in terms of debt, we have always said that we would be comfortable with a debt to EBITDA ratio of 1:1 or lower debt. So I think going forward, maybe for a couple of quarters, that ratio might be breached, but otherwise we'll definitely be within the same.
All right. And what about, the particle board business itself? It comes on board in the next quarter. So that means the next year will be a full year of revenue recognition and capacity ramp up. At peak utilization, what is the kind of revenue and margins this business can do?
At peak utilization, it can definitely do a revenue of in excess of 500 crores. Having said that, it will take some time to ramp up to the same. Our current capacity is 250 cubic meters, whereas this capacity is 800 cubic meters. So we are pretty much more than tripling in size. However, the margin profile changes drastically because our earlier press was a multi-delight press, which is more outdated technology, leading to higher operating costs. Whereas in the new press, in the new line, we will have a continuous press. So this will lead to at least a 10 to 15% EBITDA delta over the previous line. So once we commission the same, I think particle board will see a revival both in terms of value and margin.
All right, just a final question before we let you go. Looking at your 9 months revenue and annualizing it with the kind of plans that you have, it so appears that FY26, you would be able to cross 5,000 crores on the top line. Would that be a possibility with, say, 12 to 14% margins?
So as always, you're putting me in a very tight spot. But yes, I think we should definitely be able to cross that based on the volume guidance that we have as of now, the value and volume growth guidance. And in terms of margin, our attempt will always be to hit guidance. Blended, if we do hit our guidance numbers, you're correct. We should be in that ballpark.
All right, we take that point, Keshav. Always a pleasure speaking with you. With that, take a short break, come back on the other side. We, decode the